Good morning, Joe Victor with Allendale Incorporated. And of course, this is a preparing for the USD April WASDE. This is Wednesday morning on the 8th and 7th, on the 7th. And of course, one thing that we are taking a look at is there's additional some data that's collected from the March report to the April USD WASDE. And of course, what is it the trade is looking at? Not only stocks, but also looking at the crop plantings. One thing that we're going to alert you to, first of all, 1.799 billion bushels what USDA is presently using, and of course Allendale is anticipating 1.903 billion bushels. And of course, one thing that we look at is primarily the quarterly stocks report that came out last day of March 31st on a Wednesday. And of course, with those additional stocks, we figure that the ending stocks, not the quarterly stocks, but the ending stocks at 1.903 need to add in here that primarily the USDA average is what Allendale has already presented. Allendale published its results early Tuesday morning, and of course we did find that, of course, with the 1.903 billion bushels, trade finally came out suggesting that it was going to be very close to our average. The other thing we're adding in here is take a look at already, and that is April, or Allendale, for 2010. The 2010-2011 marketing year. This is a corn crop that you are planting right now, and we're figuring 1.627 billion bushels. You are not going to see a USDA World Ag Supply Demand estimate for 2010-2011 until comes out until the May report. So we've got another 30 days at least in order to get USDA to come out with what Allendale is estimating 1.627. Of course, we're using 88.8 million acres. We're using a train yield average of slightly over 160 bushel per acre. The one thing I want to point out to you is that 1.627 billion bushel, and again, you got to go back to 2007 to find lower stocks, and that's 1.624 billion bushel. And of course, one thing, you're going to see this on the beans as well as the wheat, but the one thing, of course, that we are taking a look at, of course, is ethanol usage increasing, the feed demand, a slight increase when you factor in the DDG, distiller dried grain solubles, and of course also anticipating a slight build in the exports. For soybean end stocks, again, basically coming off of the grain stocks report that came out end of March, Allendale's now at 215 million bushel. And of course, that compares to what USDA is presently using at 190 million bushel. One thing, of course, that we take a look at is not only the 215, but a trade average is coming in at about 209 million bushel. We are looking at 333 million for 2010-2011 marketing year. Again, it'll be slightly more than 30 days before USDA releases its WASDE. But of course, you're looking at very tight supplies, 2008, incredible base appreciation, primarily Louisiana, Mississippi, Arkansas, even into Missouri and Tennessee. But of course, at 333 million, we are starting to leave that 300 million benchmark. We get below 300 million, look for the trade to be supportive to this market. When it comes to wheat stocks, looking for a 10 million bushel reduction from 1,000,001 bushel to 991 million bushel. And of course, one thing that we take a look at is primarily the export market, figuring about a 10 million bushel increase. And we got 10 weeks left in the marketing year. And out of that 10 weeks, looking for 5.9 million bushel per week over the next 10 weeks. So that's on a per week basis, going from 4.9 to 5.9. Of course, when it comes to Allendale's 2010-2011 marketing year, this is supply restricted. It is not demand driven, small acreage, 963 million bushel. And let's break it down. What is the trade going to be looking at? Not only stocks, but stocks to use. And of course, we're at 15% versus USDA's 13.8%. We're looking for a slight build in the world stocks at 15.9% versus USDA's last month at 15.7%. And that is a slight increase not only in U.S., but also in Argentina and Brazil production. Take a look at 12%, and this again, you're going to have to wait until USDA comes out with their report in May, but you're looking at 12% versus 12.8, 11.6. That is the second low or third lowest at 12%, lowest end stocks to use. And of course, if the USDA wants to, they can slip the rug right out from underneath our feet by denying ethanol. But again, it comes down to looking at the oxygen level, getting rid of MTBEs and going into ethanol. It is primarily ethanol. It's the second biggest user. Soybean end stocks looking for in the world market a build from 19.1% USDA, Allendale suggesting 19.6%, and that is a slight build not only in the U.S., but more importantly in Brazil, Argentina, Paraguay, Uruguay, looking for 7% domestically, and that is a slight build in U.S. stocks from 190 million bushel up to 215 million bushel. We're at 5.7% USDA. Allendale suggesting a 7% end stocks to use, and of course the 2010-2011 marketing year were at 10%. Slight decrease in looking at U.S. stocks to use, and that is a 50.4% by USDA. Allendale suggesting 50%. We've already covered why. We're looking for a decline, and 45% when it comes to the 2010-2011 marketing year. And of course, when it comes to the world stocks, we're essentially Allendale is unchanged at 25.5% when it comes to world stocks. But I will point out, you're looking at some of the highest end stocks to use at 25.5 on a world basis. And of course, you have to go back to 16.8% in 2007. You can see how the world has responded to, again, high prices curing high prices, as much as low prices cure low prices. What is it the trade's going to be looking for after those stocks report, whether it's U.S. or the world, end stocks to use, primarily weather. And that is, again, we're looking at the planning progress that's taking place within the greater Midwest and the field work. You're looking at a 6 to 10 day forecast, 12th through the 16th of April. You're looking for above normal temperatures, primarily in Illinois, Indiana, Ohio. You look at precip, don't want to be farming again in North Dakota. There's 2 years, almost 3 years in a row now, primarily North Dakota. They don't have many options. It's primarily a corn, soybean, sugar beets, edible beans. That is that type of a market. And of course, when it comes to, that's primarily a corn and bean market. You're looking for below normal temperatures. So we see good progress coming into, again, the 12th through the 16th, good progress through Nebraska, Iowa, Illinois, Indiana when it comes to field work. Wheat, primarily in western Kansas. And again, you're looking at primarily slightly above normal precip when it comes to the 6 to 10 day forecast. And that is something that Allendale is keeping its eye on, as not only the National Weather Service, but private agencies. Additional precip to bring the drought tolerance back to at least 50%. You're looking primarily in northern Wisconsin as well as Ohio. But again, you're only looking at trace to 3 inches, primarily in that Ohio region as well as central Wisconsin. The rest of the country, for the most part, doing very well when it comes to seedbed preparation. One thing I'll point out to you, and again, you're going to look at Allendale representatives. Takes about 15 to 20 minutes on average for them to, for anybody that doesn't know a lick about three-way box option strategies, you're looking at 15 to 20 minutes of your life in order to come up with what is specifically for your farm operation. In this case, we use 200 bushel an acre on 1,800 acres, using an average basis of 30 under 6%. We're looking at selling a 420 call, buying a 380 put, and selling a $3 put. We figure when you're at 415, that is the topside objective right now. 450, 460, chart damage has been done. But again, we're looking at 415 to 420. If we get into some weather worries as well as historicals that tell us as seasonals that it's primarily in this planting progress that we see not only corn and beans. 420 selling the call, and of course put, we're buying a $3 put. And of course you can look at different strike levels when the futures expire. you can look at where is your best opportunity. It's primarily at that 420 level, $754 per acre, and that is a final price. We include the price of the puts and calls as well as basis levels. And again, you're looking at primarily when it comes to 15 to 20 minutes out of your life in order to understand how specifically 3-box option strategies can impact your livelihood. We're asking you to make sure you're saving big on the Allendale Research Center membership. Go to the homepage, worldwideweb.allendale-inc.com. And of course, the Allendale Research does include not only fundamental but technical information as well as links, direct links to sites that we take a look at from time to time. And of course, you give us a call at either 800-551-4626. Feel free to give us an email at research@allendale-inc.com. And the website again, allendale-inc.com. This is Joe Victor with Allendale Incorporated with a pre-April USDA WASDE. Any questions or comments, feel free to give us a call. Thank you and have a great day.